Hello everyone, you're at the latest market news on December 6, 2021. China Evergrande's debts prompted government aid. Shares of China Evergrande Group fell 12% to an 11-year low Monday after the company said there was no guarantee it would have enough money to pay off its debt, prompting Chinese authorities to summon the chairman of the board. The stock fell as the 30-day grace period for the $82.5 million coupon payment expires Monday. Evergrande, once China's top-selling real estate developer, has more than $300 billion in liabilities. Its collapse could cause upheaval in the country's real estate sector and beyond. That prompted the Guangdong provincial government, where the company is based, to summon Evergrande chairman Hui Kaiyan, and later in a statement it said it would send a task force to the company at its request to oversee risk management, strengthen internal controls, and maintain normal operations. European futures rise amid good market sentiment. European stock markets are expected to open Monday with gains starting the new week on a positive note amid hopes that the Omicron variant of the COVID-19 virus may be less dangerous than previous strains of the disease. The DAX futures contract in Germany was up 0.7%, the CAC 40 futures contract in France was up 0.6%, and the FTSE 100 futures contract in the UK was up 0.6%. Stocks around the world have been rocked by the emergence of a new variant of the coronavirus and the uncertainty of its economic impact as countries impose new restrictions to combat its spread. In Europe, a positive start to the week is expected, recovering from last week's losses, but any gains are likely to be tempered by caution as scientists try to figure out the seriousness of the Omicron variant or the level of protection provided by existing COVID-19 vaccines. German industrial orders fall amid weak demand. Industrial orders in Germany fell much more than expected in October because of weakening foreign demand for capital goods such as cars, data showed Monday, further dampening growth prospects for manufacturers in Europe's largest economy. Pandemic-related shortages of microchips and other electronic components have caused massive supply bottlenecks and manufacturing problems in Germany's powerful auto industry and other important sectors of the economy. Orders for made-in-Germany goods fell 6.9% for the month on a seasonally adjusted basis after a revised increase of 1.8% in September, data from the Federal Statistics Office showed. Analysts had expected a smaller decline of 0.5% for the month. Oil prices rise after Saudi Arabia's price hike. Oil prices rose more than $1 a barrel on Monday after leading exporter Saudi Arabia raised the price of its oil sold to Asia and the U.S., and indirect talks between the U.S. and Iran on extending the nuclear deal appeared to have reached an impasse. Brent crude futures rose 2.3% to $71.49 a barrel, while the price of U.S. West Texas Intermediate crude was $67.89 a barrel, up 2.5%. On Sunday, Saudi Arabia raised January official selling prices for all grades of oil sold to Asia and the U.S. by 80 cents from the previous month, despite an agreement by OPEC Plus to keep raising supply. Prices were also supported by lower prospects for increased Iranian oil exports after indirect U.S.-Iranian talks on keeping the 2015 Iran nuclear deal intact broke down last week.